In this presentation, we will consider tax software to look at marginal and average tax examples. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in the tax software. We're currently using Lacerte. The end result will be much the same for any type of tax software in terms of the forms, however, because the forms will generally be standardized. We're in a Form 1040 for a single filer, 2018. If we look at page 2 of the 1040, then we're saying that we entered $40,000 for this example. $12,000 is a standard deduction. We'll talk about more about the standard deduction later. There's the $28,000 taxable income, and here's going to be the tax. Now, Lacerte software also gives a nice summary. Many softwares do, and that's going to be this tax summary. So this gives us a nice little tax summary. And note that this isn't an advertisement for Lacerte. It's just this is one software that can be used. You'll probably have similar type of summaries in different types of software. So in any case, we've got the income, the $40,000, the adjustments, none. We have the standard deduction at $12,000, and there's our taxable income of the $28,000. Then we have the tax, which just magically appears in the software because again, it's kind of a complicated system. Now, there is a schedule to it that we can go down and look at the schedules for the taxation. But again, it's kind of a complex type of schedule no matter how you cut it because it's going to be a progressive tax code. So here's the tax. What a lot of softwares will do for us then is give us a nice little marginal tax rate and effective tax rate at the bottom. So here's the marginal and effective tax rate. So if we test this, we're going to say, okay, the effective tax rate is 11.3%. What does that mean? Well, if we take the 3173, the most common type of calculation we would do is we'd say, well, what's the average tax? How much are we paying on average? How much tax are we paying? So we'll take the 3,173, the tax we pay, or the tax, and then divide by taxable income, 28,000. And that's after the standard deduction. And that's going to be the 11.3. So the software is calling it effective tax. It's basically the average tax. That's what we pay on average. The marginal tax is going to be the highest tax rate that we pay. So the marginal tax rate is that highest bracket that we're in. So let's change this a bit and see how these numbers change then. So you'll note here they're pretty similar to each other. At the 40,000, let's go to and let's say we're currently in the data input screen, and this will change depending on the type of software, but the data input will be similar. The data that will actually be input will be similar. So here's the 150 in wages. So we'll say, okay, let's change that to 150. Go back to our forms and see what happens here. So now we're at 150, same standard deduction, 138,000 in terms of taxable income. Now we're paying 27,410. And if we look at our comparison, the average or effective tax rate is 19.9, and the marginal tax rate, the top rate, is now at the 24. So you can see that the top rate is now increasing. So now if we're going to, it's going to be higher than the average. So of course the average means that we're paying, some of the money that we're paying is at a lower rate, some of it is at a higher rate. The highest rate that we're currently paying on, meaning the last dollar we earned, we paid 24% on it. If we were to project in the future, then if we think we're going to make more money, we're kind of concentrating on this marginal tax, because if we make more money, the average doesn't help us, the marginal helps us, because we're going to pay taxes on the next dollar, on the highest rate, what we're currently at. For more accounting information and accounting courses, visit our website at accountinginstruction.info.